Welcome everyone, my name is Mike Hamilton from Trade the Easy Way, and I'm just going to walk you through the markets very quickly as I see them. So we're looking at the dollar index, and so Trump gets inaugurated, and throughout the first half of 25 the dollar drops hard, and the subsequent highs sell and get lower lows. So we bumped into resistance in here March and April, back down to lows. So we're now getting in the tighter and tighter range. Today we get the new Fed chair voted in, and he is hawkish. He wants to conquer inflation, and he wants to reduce the deficit. So that's a lot to do, but to do that he's probably going to have to increase interest rates, which could see the dollar break through parity. So if that happens, that could well affect the markets. In the meantime, we have the Nasdaq on an absolute tear. So ever since we kicked off end of March into April, all minor pullbacks have been bought, and we are just shy of the 30,000 mark. So if that were to keep going, then I would expect that to pop up to 32. Could well hesitate around the 30 mark if we stall, but subsequently pull back to support around about the 28,000 mark and hold, then that could see us pop through to 30,000. But just note how high the RSI is. So the market, that's telling us the market is expensive. It's not telling us that we're going to see a reversal. It's just saying that the market is well and truly in its upper limits. So for this to close underneath 28.5, that could see some pullbacks and a retest of 27,000 and possibly lower. 26.3 is the main support. So we're high, but the market is not bothered. Pullbacks are getting bought. So we saw a significant pullback to 28.6 yesterday, and here we are just trying to push through 29 into 30. All right, so let's have a look at the FTSE. So FTSE has peaked at 10,945. We had a lower high here. So we had a lower low and a lower high. So we are at another subsequent lower high. So either this is a lot of support down here. This is a head and shoulder here. If this is forming another shoulder and we subsequently close above 10,500, then we are going higher and potentially up to make new highs at 11 through 11, 11.5, etc. All right, but if we close under the obvious number 10,000, then expect this to really break down, and we'll come and see 9.5 and go on the 9 and possibly lower. All right, so at the moment we are in this little apex, and close underneath those lows or close above the highs, and that will give us direction. What do I think is going to happen? I think we will see possibly some higher moves into May and June, but then as we get into the doldrums, see a significant pullback, and then if we survive June, July down here and start closing higher, then I think we can pick up again. So just be careful. Selling may and go away. I mean, here we are just coming up to the halfway point in May. Be careful. I mean, we've seen how fired up the Nasdaq is, but this FTSE at the moment, as we stand at the moment, cannot close above the 50-day average. So technically, anything that's underneath the 50-day average, you should short highs and short any retests of that average, which we've literally just done this morning, up there at 10,350. Okay, so if we closed above the 50-day average on Wednesday the 6th, but here we are dragged underneath it. Be careful is the word. but certainly no reason to sell up at the moment. Gold, we're just moving sideways, so we had a severe drop on the 23rd of March, pulled up into 17th of April, and now we are just trading water in this tight range of 4,900 and 4,500, roughly, give or take a few pips. This new chair, I've just said, has the desire to really get inflation back under control after the geopolitics of the last couple of months. So that could knock gold off its pedestal. That could see gold retracing deeper into 3,700 and possibly lower. However, get above 4,900, 5,000, and this is going to come and find 5,000, 5,500, 6,500. But it looks likely that we may see deeper pullback before that. With all that's going on, let's look at oil. So oil is sitting up. Obviously, we're just 125 pips under the $100 bump mark here. So if we close above 105, then we're potentially going to see these highs again and go up to 130 and more, 150 plus. If we close above 115 even, we'll see 120, 130 pretty quick. So if the dollar does get strong and there is a resolution to the situation in Iran, then this could well fall out of the sky. We've got this gap down here at 68. So if we close under 90, we're going to see 60. I think we'll see 68 pretty quick. This could really fall over. But yep, as you can see, the upside is close above 105, and then this could really rip up. All right. So Diageo, we've recently I bought at 14.5. We've just tested 15.5, 15.6, and here we are just above my entry point. And so higher interest rates could really kill this off and drag this right back down to the lows, and who knows, maybe even lower. It has been on a horrendous journey to the downside. You can see that we are above this pincer pattern, this funnel. Now typically, if a market can close above the funnel and sustain itself above this level, you would normally expect that to break up quite hard over a relatively short period of time. So you're looking at the weekly chart here of Diageo. So if Diageo can do that, we should see 20 in a matter of weeks. If this holds and that pops, but be very cautious if that closes under 14 and certainly under 13, and that you can see that tumble right back much lower. Note the volumes here. So we've seen that this is the 50-day average on this volume indicator, which we have closed above on several occasions since the 23rd of March. And we even did that yesterday. No, so it's a weekly chart. Sorry, we did that last week. I've forgotten it was a weekly. So hold this, and we are going to see some nice movement, which is obviously what I'm expecting, but be very cautious if that closes under 14. A couple of cheapies which are just not working out at the moment. This is Metal One, an AIM stock. I think I bought this about 1.5, 1.6. I'm currently 1.2. So it's not uncommon for a cheapy stock, any stock, to do this prior to a breakup. Could just be running stops, getting stops out of the way. So if we subsequently close above 1.5, 1.7, this could really pop quite quickly. But so I'm not unduly concerned at the moment, but just keeping a close eye on it. If you're interested and you're cautious, I would stay out of it and see if we can get that daily close above 1.5. You can see here we came down to the low on the 23rd of March, and now we're underneath that. Now a pop back above 1.5 in the next 24-48 hours will be extremely good for this and very bullish. Obviously a close under 1 and we are potentially toast. This is IQE. This is a good example of what can happen. So this actually gapped down. So if I pull back here just to explain, so we had a good move up here into about 10-12p, and RSI got extended. So then we drifted lower. I think we saw it would get gap down. We went right down to 4.8p, hovered around there for quite a good few months, right? 6 months, maybe 4 or 5 months, and then look how this break broke out. So you got a severe move up, pulls back into the launch area from that break, and then we go into multiples. We've seen 70p from 4.5. Now it's much more common in the US. That's quite rare in the UK. But that's why it's sometimes worth having some investments in stocks like this, but just be much more cautious. You need less capital to make a decent return on this, so don't lose sight of your risk management. You stay nice and tight and just see if you can benefit and multiply a small amount of money. Stocks I've recently bought into. I bought this CAML, Central Asian Metals, I think it is, on the LSE London market. Bought this at 147. We are, as we speak here, at nearly midday on the 13th at 162. There's still plenty of time to get into this. If we see 150 again, then you might want to try and take part in this. If we can close above 165, 170, next stop is going to be the £2 mark. And if it really gets going this year, we could see £3 plus. I see there's a long way to go. Don't buy a stock like this and assume you're going to do this. Most of you will know this, but I'll repeat it anyway. But if we come up and the volume is sustained, look back here in November 25, right to March 26, we pulled up and the volume increased. That's what you want to see. So if we continue with an increase in volume on this stock, then it has greater potential. This is one that could do a similar thing. This is a cyclical stock, Domino Pizza. My view is, I'm sure the widely held view is that people tend to eat less pizzas in summers, particularly if it's a hot summer. So this could be a good time to sort of dip into this one. We're currently 188. If we sit above this 185, 187 and hold, then this, as we get through the summer and come out of the summer, this could wind up to 240, 250 plus. I would be patient and see if we can get back to at least 160, possibly 150 if the market really gets uncomfortable during the summer. But that's the time to start buying a cyclical stock like that. Money Supermarket, this is a daily chart by the way. I can see Money Supermarket coming all the way back to 150, 160. That's where you can see the support from the 7th of April. That's where the demand is. We've hit supply up here at 180, currently 170. I think this is a good stock to watch out for, but I think if you want in on this, I will just be patient and see if we can get some lower numbers, 150, 160 on this. And then you've got the potential, if we ever get above 185, you've got the potential to do £2 plus on Money Supermarket. This is one I'm in. This is Shore Banking. I think I'm slightly underwater on this. I think I got in, yeah, I got in about 318. As we speak, we're down here at 312. So we had a decent move on decent volume when I got into. I didn't realize you couldn't see the volume, can you? Right, hang on a second. So I didn't realize you couldn't see the volume. You can now. So we came up on decent volume into that resistance area, but suffering. So only closed under £3, and this could easily come down to 250 or less. So my stop's under here. I can't remember where my stop is, but it's under here somewhere. If we break this low and hold lower, then this is potentially going to roll over. So in the meantime, this is, if we close back above 320, 350, this has got an opportunity to really push up. The brokers' views are quite bullish. That's one of several reasons why I bought into this. But if we can get up here, then I think we're going to see £4, potentially £5, if we can close above these levels. But at the moment, it's having a bad day, and it's not looking good, and I'm slightly underwater on Shore, SHAW, on the London market. Rio, if you're really patient on Rio, talked about down here at 60, we're currently 82, hitting a target for a lot of traders up here, and you can see the volume down here increased. So if you were in Rio and stuck in it, well done. Keep an eye on this one, CTech, because we just put in a potential reversal signal down there yesterday on volume, and you can see that, if I can just grab the tool. So we broke support from November 24, just closed on that support. So this is potentially a good move. If we can subsequently get above 210, this could be a breakout candidate. I need to do some more research on this stock, but just, yeah, we're right at the bottom of the we've bounced off the bottom of the funnel at the moment. Any close above £2, 230, something 230, that could really start to motor on CTEC. I don't know what's happened with Avon today, but Avon looked, you can see some red closes here, volumes dropped off, and we pushed right into, we've just touched 1468 on this one. Note how this could not close above the 50-day average after the 21st of April. So there were clear technical signs this stock was struggling, and here we are. The main support down there at 1366, 1370. So you may well see that. So reason to be cautious if stocks are behaving in a certain way. This is a US stock called Now Service, I think. I can't remember. I've kept an eye on this, and it's just not working. I see the 50-day average clearly trending down. A push, it was recently into 104 and fell. So yeah, reasons to be careful out here, and just watch the technicals, stick to these technical rules, and you should protect your account. In the meantime, if this closes above 97.10 anytime soon, then I will start to get into this one, take a position, and see if we can get into 140 plus. But at the moment, I am not touching it. Right, I'm going to leave it there. Please let me know what stocks you're interested in, or what stocks you're in or thinking about. Yeah, we can create some dialogue and exchange some ideas. Hope that helps, and bye.